Hi traders and welcome to the weekly commodity report. I'm your host Paul. In this video we're going to look at natural gas, oil, copper, gold, silver, and uranium. So let's get started. We're going to look at the natural gas futures contract, and we broke on this contract anyway, we broke the August 15th high yesterday on Tuesday. So that's a three-wave move. That's pretty obvious. One, two, three waves. And so now I'm expecting it to come in and break the low one more time, because this is not unless things change and they come back up and break that 243 level again. This is just a three-wave move, and it's just a series of three-wave moves. So you had three up, and then you had three down. And then I think this was just like a perfect uptrend in a very tight range. And I think all this was this is A and B, made a running flat here for the B. And then I think they made an ending diagonal. 1, 2, 3, 4, and then 5. And now it's selling off. Now, can't even confirm that this is done until they break 2265, and they came really close today. But someone was defending it. So price just kind of hanging out there. So I want to see that level break before I feel like this is done, because this could end up turning into a diagonal, because then you would have your ABC, and all that would just be the A wave, and then you could get like just a three-wave correction, which they already have now for a B, and then still one more up. So still a lot of patterns that could play out for them to go up one more time, but we do have a three-wave pattern going up that broke that August high. So all in all, this would just be a WXY correction. And then I expect it to come down in three ways to break that low one more time. So see if they first break this 2265 level, and then if so, let's see if this is just going to be a three-wave correction for still one more up. So, but my overall picture for natural gas still remains the same. I'd only want to be buying, even though now this is up here, you're taking a short. Now you're actually playing for something. It'd be probably a 13 to 15% gain that you could get, but I think the safer play is to only be in the buys, because after that three-wave move and then this three-wave move, it'll either come down in three or five ways. It just depends if they want to make a big WXY or this would be an ABC. So yeah, I'd still, because once they break that at any moment, that could be the low. So actually, like doing a hedge, going long but hedging with a small short, that would make a lot of sense. So that's what I'm looking for on natural gas. Still another drop. Moving on to oil. So now on oil, this is the futures contract. So I had switched away from it, but I'm going to switch back using this back adjustment tool now on TradingView. And I'm going to stick with that, because even though the price levels on the continuous contract might not make sense, I was using this oil, US oil chart, and if we drill down into like a 15-minute, this huge red drop is fake. Actually, if I move out to a 5-minute chart, then we'll see why. There was a gap because of the contract roll that whatever this US oil is using. created this artificial drop, even though there wasn't a drop. So if we go back out to like the 30-minute, and I just point this out where this was. So this was back on Monday. They had this drop, and so the high was Monday at like early in the day, and then on this chart they made like a three-wave correction. But if we look at the actual futures contract, this is where that drop happened over in here, and you could see that the futures contract, it didn't make that substantial of a drop, just a little three-wave correction, and then they went back up. So that's why I'm abandoning the U.S. oil chart, and I just want to give an explanation on why. So, all right, so because of that, now I'm using the futures contract, and for right now, I think this is going to be a running flat. And so I think, like he had a three-wave move up. This was really sharp. This is just a three-wave correction up. And then this was really sharp. So for right now, I think this could be a running flat. And then they're going to go up and break 70, 74 one more time to complete this fourth wave. Because I think we're in this big diagonal. So 1, 2, 3, and I think we're in 4. And I don't think it's either in, the high is in, or like I said, they'll have one more up, complete this. This will be like A, B, and then go up for the C wave for this 4, and then oil is going to turn. So the key level to watch, the two key levels, 60. Oops, let me move that over. 68.58 and 70.74. So if 68.58 breaks, this is not a running flat, and then this was just a three-wave correction here, and then they're gonna really start to accelerate down, I think. And then this must have been, I'll have to relook at this, would have to be like some type of three-wave move here. So yeah, watch that 68.58. I think if that breaks, then this could be starting to move down. But if they do break 70.74 one more time, then I think that's a really good opportunity to get into the short. For oil to come all the way down and break on this chart, it's 64.09. That'll take some time, and depending on which contract you're trading, the price levels might be different. But whatever the September low, September 10th low is on your chart, that'll get broken one more time for the fifth wave. So yeah, I'm only looking for shorts on oil, and it just depends on which of these levels get broken, if the fourth wave is in or if it's got a little bit more up. All right, let's move on to the metals, and we're going to start with copper. And I'm going to go out to a 4-hour chart. Now copper, there's a couple of patterns that are in play here. One bullish and one bearish. So if it's going up in a diagonal because of this A, B, C. And that would be 1. And then they had this deep A, B, C for 2. And so if they're going up, got to go up in 3 waves. And so far I see 5 waves. So 1, 2, 3, 4, and 5. So this area, 427, which they broke the previous high. So we can move that high off and move it over here. They broke that previous one. So if they're going up in a diagonal, they're going up in the third wave. This 5-wave move would be just the A wave of the third wave. And I kind of would expect this area to hold. They could drop it lower and it'd still be okay. But you're looking to go long, this would be the first area, this 427 to 422, three-wave correction into here. So I wouldn't buy yet because they've only had one wave down. But then you should get a correction and then one more up, and that would be the third wave. So then that would be one, that'd be two, finish three up here somewhere. Gonna get a big three-wave correction for four, and then still one up for five. So if they're going up in a diagonal. So looking for a three-wave correction and buying that would make a lot of sense to me. But I would have a tight stop under this 404 low. So, you know, if they come down 1, 2, 3, and you were to buy either up in this range or maybe a little bit lower, looking to play for that third wave, I just would have a stop loss under here, because if all of a sudden this turns into, you know, a big impulse and it's coming down, the bearish pattern on copper is that all this is just a 335 correction, and then there's one more low under 399. And then I'm gonna have to really look at this, because I think the 4 should be in, because we had an ABC down and an ABC up and then a strong move down. So basically just a three wave, which is what you want if we're making a diagonal going up for the fifth wave. That low 399 really has to hold, because there's not a whole lot much more room to the invalidation point for this being a diagonal. And then this could be turning into a much bigger correction over here. Oops. You know, something like this, and it could be coming like way down there. So still have to guard against that happening. So that's why I would just have a tight stop if you're going to get in on copper under 404. But as long as they can just make a correction somewhere into either this range or a little bit lower, and then reverse and take out that high again, then this is looking really good. Copper is looking like they're in this diagonal. So that's what I see on copper. Let's go on to gold. Okay, so gold today broke out to a new all-time high. They finally broke that third wave high from August. So I'm going to take that high off. So now we got this new 2600 level high. And so I think the third wave is in. So now gold gets a little tricky, and especially if we drill in a little. I mean, it made that new high and then straight down. So that to me definitely tells me that they've made probably a significant high, and there could be a big correction. I want to see what happens in this zone, 2541 to 2505. It's possible that after this 5-wave move, this was a leading diagonal, and they're just going to correct still for more up. And then that just tells me that the third wave is going to be going up a whole lot more. Because then you would have like 1, 2, 3, that was 1, and then this was 2, and then if they correct down for 3, this would be 1, 2, 3 waves, and then that'll be the third wave. So then this third wave has got more up. So this is the first place if you want to take a chance, but I think there's a good chance that they're coming down for the fourth wave, and it could be coming down into this zone, 2367 down to 2223. That's definitely where I'd be looking for the buy setup to go up for the fifth wave. So still need confirmation that this third wave is in. Given the size of that drop when they made the high today, how quick it was, I feel like they might be pushing. So definitely, I think if you see a push below 2500, I think it could be coming down into this zone here. So let's watch this. But yeah, I wouldn't be buying here. Definitely not yet if you're not in. And if you're already in, then you just got to make a decision on how you want to handle it. You might not care if it even corrects down for more to go back up. All right, silver. Okay, so silver 2, big explosion up. broke the previous high from August, so I'll take that high off. And so right now, it's just a three-wave move. So 5 made this ABC and then up. So you got 1, 2, 3 waves. So I want to see the reaction at 29.02 to 29.44. Because so far we just have one wave down. Very strong, just like gold, straight down. So I would assume that they're going to correct up and then one more down, and then I want to see if this area holds and if they can go back up and break. I still think that they're going to go break the high, 32.51, and then probably higher. But the pattern I want to see is this 1, 2, and now they're just in the third wave, and this is the first wave. They'll correct down for the second wave, go up for the third, the fourth, and the fifth of the third wave? Or are we going to be like in some kind of like a diagonal? So you have like a 5, 3, 5, and that would be 1. And then if they kind of blow through 29.02 and come into 28.81 down to 28.24 in 3 waves, then that could be 2. So then you'd have 1 and a 2, and then they'll be going up in a diagonal format. So these are the 2 levels I'm watching. So if you're not in, you're going to get another opportunity. I think. I don't think this is just a 3-wave correction here, like a 1, 2, 3, and now they're going to come all the way down. I mean, there was no divergence, and I think this was, like I said before, this is just a perfect 3-wave correction that they came down to this 26.40 level, and now silver can go back up. So to me, everything looks really good for silver. It's just a matter of how deep is this correction and what's the pattern going to be going up. We don't know that yet. But yeah, if you can get it in one of these 2 levels, I think that'd be really good to play for the upside. Uranium. Okay, so uranium was looking really weak in the last video I made, and then it got even weaker on Friday. Almost came and broke that previous low of 22.79 and then just ripped higher. So we still don't know the pattern. We don't know what this all is. I'm looking just for a 3-wave correction, and that's what we have so far. But like I said, because this C wave here was so strong, you had no divergence. It almost feels like this is just the A wave, and this is all going to be B, and then you're going to get one more C coming down, probably below 22, and then you have a nice 3 ABC correction, and then it could go back up. So what I'm thinking is that if this was 3 waves, probably another 3 waves, and then either 3 or 5 waves down, and this will be like the A and a B, and now you're getting like strong move up. Already you have like a perfect 3-wave correction here. So that this could be like well, it's either going to go up in 3 waves or 5, we don't know, but I think anywhere above 27.55 could be it, and then it might roll over one more time, A, B, and then come down for a C, or this could be WXY, who knows. But it'll end up being just a big 3-wave. That'll be like a 1 wave, and it'll be a 2, and then there'll be another wave, one more wave down. So what are you playing for if you're going to play from right here going up? Oh, you're playing for 10%. That's pretty good. So I think, definitely looks like it's going to come down a little bit more given that strong sell-off. So probably about halfway or so. So mid 24s on this chart. So, that would be like 1, and could be 2, and then it'll be going up for like a 3, a 4, and a 5. And yeah, I think that'd be a really nice trade, because actually then from down there, if you could get it in mid 20s, up to the top is 12%, and probably go a little bit higher, but yeah, that's at least a 12% gain. So I like uranium a lot to go at least up to there. And then right there, you're gonna have to make a decision. You know, do you think it's going all the way up, or is there still the possibility of still one more down before they are gonna go up to take 33 high out? But yeah, uranium looks really good, and I think you can be able to get a little bit lower for one more up. All right, that's what I see on the commodities. Hope it helps. Thanks for your likes and support. Good luck. See you in the next video.